It's like I get this all the time now.
What's the
It's
question?
like
I don't just rephrase
it's like
the question.
if you have two houses, you're stealing a house from my mom because she could have bought that
Well,
house.
somebody needs to rent a house. Not everybody's going to own a house.
Yeah,
I mean,
so
the
it's just
homeownership rate's just above 60%. So 40% of the people don't want a house
yeah, they
or
don't want
can't
it.
afford a house.
Yeah, like Kenny
Yeah.
says, like it's what is it? Intentional renting or
Yeah.
renting by choice? Yeah, a lot of
I've
them.
rented by choice many times and I'm rich. Okay.
Yeah,
I can afford a
yeah,
house.
yeah.
I own lots of other houses, but
It's,
I rent out of convenience
because
sometimes.
it gives you more freedom.
Well, it gives you more freedom, but also it's a better deal.
Yeah,
Okay. What we talked about before, the rent to value ratios.
yeah,
If you rent a high end home, that's a great deal. I'll give you an example. A friend of mine has a $3 million house in Manhattan Beach, California. Okay. And he was getting $9,000 a month. He just told me the story Friday morning. I had coffee with him in Newport, in Corona Del Mar. Okay. And he was getting $9,000 a month for his $3 million house. That's a terrible deal.
that's
Okay.
that's the
He should be
50%.
getting 30 grand a month. Okay. We want to get as close to 1% of the value per month as an investor.
Yeah,
Okay. So if I buy a $300,000 house, I can probably rent that house for $2,600, close to 1%. You can't quite get 1%
sure.
nowadays
Yeah,
anymore. You used to, but you had to buy earlier. So that's not a bad deal, right? I can get a 0.7%,
0.8
right?
usually
Or even
breaks
0.8.
even.
Yeah. Okay. So that's a good deal for me as the landlord. But a $3 million house is, maybe going to get 15,000 a month at the most, which is 0.5. So as a renter, it's a better deal to rent a high-end home and own a lot of low-end homes you rent to other people.
Yeah,
Because the rent to value ratio, it's what I was saying before. If the house is under 400,000, you should almost always buy the house if you're going to live there.
okay.
If it's over 400, 500,000, you should almost always rent the house and live there financially.
I should sell this house.
Well, I mean, I'm just saying from a financial perspective.
But it does make sense for people listening. We're right now in Orange County. If I rented this home, maybe I can get 7 grand tops, right? It'll cost you at least not. I don't
How
have
much is
this.
the house worth?
Probably 4, 5, 1, 4, 1, 5.
Wow.
Yeah,
These have gone up a lot.
yeah. It's 2,000 square feet. So
Oh, and you have an ADU too, so that's
yeah,
a benefit.
including that, it's
Yeah.
only 2,000, right?
yeah.
But I'm saying the point is, you can rent this house for 6, 7 grand
Mm-hmm.
easily, right? You can probably find it somewhere.
Your RV ratio is only 0.5 or so, give or take.
I can guarantee you, if you bought this house today, it will cost you more than 10 grand to PITI for
yeah.
sure.
Yeah, but that doesn't,
That's different too, right?
People get all mixed up when they start calculating the mortgage payment. That's
Yeah.
not the right thing to do. Just look at the ratio of rent to value.
That's it, right? Simple.
Yeah, because the mortgage payment varies by the interest rate.
How much you put down?
It varies on how much you put down. And it's too many variables.
There's too many stuff.
Just look at the rent to value ratio.
So even in this environment, 2025, we're in April right now. It's still a good time to buy if the numbers are cash flowing.
There is a video on the
Yeah.
front page of my website, which I recommend everybody watch. And I have a free software. It's totally free. There's no
Property
strings
Tracker?
attached. People should go to propertytracker.com, get my free software. Look, we used to use this software and I bought it. I bought the company because I liked it so much. Okay. He used to charge for it. Okay. The prior owner, and I made it free. Okay. So just go to propertytracker.com, get the free software, set up a free account, no strings attached, and you can put the numbers in and do the performance yourself. And on my real estate website, which is my name, jasonhartman.com,
Yeah.
you can go there and there's a free video on the front page of that website, which is 29 minutes.
Okay.
Will teach you how to read a pro forma and analyze a real estate deal. Like every single number, I go over it. That is going to be incredibly valuable to people, and it's all free.
Yeah. And just this is just right, super high level for repairs and like CapEx. Where do you account 5-10%?
Depends on the age of the house.
If it's new build, you don't
So
need
new
anything.
build 2%.
2%,
Okay. Older house 5 to 8%.
5 to 8%.
Yeah. I mean, depends how old the house is. If it's 2010
Off
vintage,
the rent per month.
5%. If it's older than that, maybe 8%.
Mm-hmm.
Yeah. But every house, well, I don't want to say every house because we do have some exceptions and people that want to do their own rehabs. But most of the properties Empowered Investor sells are turnkey properties. So they're all remodeled or they're brand new. They come with warranties, and that's the reason your maintenance expense is projected like that.
Yeah, I hear horror stories about turnkey properties all the time.
Really?
I do.
Well, they're not
However-
really turnkey then.
Yeah, they're really turnkey.
Yeah.
But I personally, the last 3 I bought were new builds, and I love them
Mm-hmm.
because I call the builder and they just fix anything.
Yeah.
Or-
You have a
It's
warranty.
like it's nothing. I prefer them over remodeled ones too.
Yeah. Well, look, I prefer a Rolls Royce over a Toyota. Okay, but I mean, it just depends how much you want to pay.
Okay, I totally forgot to ask you this. I want to ask you, and I've kept you for long. But it's investing in A, B, C neighborhoods and properties, right? I started off in Bakersfield, and I'm being conservative, and I say it's a heavy D when I started, right? It's just so much management. I still made money, but it's a lot of work, and I eventually now moved all the way to A now. I don't even like B minus.
Look,
What are you for new investors?
I can tell you, I have seen this pattern. I've been doing this 21 years. Okay. And I've had some clients that have been with us forever. Okay. And they've been following me for a long time. They listen to my podcast for 10 years before
Buying one.
putting in their email address on anything we have. Okay. And getting on our mailing list. And by the way, we have a great newsletter. So put in your email address on our website and we'll send it to you. I see the progression. Almost all people go this way. They start with C properties because the numbers look better. And then, after a few years, they've made some money and they want to trade up to 1031 exchanges to A properties. And that's a very common thing people do.
And you think that's recommended?
Yeah, I mean, some people, love the C properties and they just like that style of property. It gets cheaper to buy. The rent to value ratios are better, and they do great with it. It just depends what you want to do. I mean, everybody has a different style. If you're like looking for a business, right? Say you want to buy a business, you could buy a McDonald's or you could open up a fancy restaurant, right? I mean, it just depends what you want to do.
But if they both make the same amount of money over 10 years, why
Well,
would
they
you
don't
buy
necessarily
McDonald's?
make the same amount of money. I mean,
Usually A will appreciate more, right?
yeah,
So then they
but C will have better cash flow.
starting, and then eventually it even out because it won't go up as much every year, right?
Well, that doesn't make the cash flow lower. Those low end rents tend to be, supported better by the market, the cheaper
Yeah.
rents.
Plus you have fixed debt too, so it's like it gets better, right?
Yeah.